How will Bitcoin change the financial industry forever? Bitcoin seems to be doing well. Early in September, El Salvador proclaimed the Bitcoin to be legal cash, enabling for payment processing. There are discussions of Bitcoin becoming a kind of currency in Afghanistan, allowing for financial transactions in a country where the issue of traditional currency has ceased to function. With the launch of a Bitcoin exchange-traded fund on the New York Stock Exchange this week, cryptocurrencies are even making their way into conventional finance. U.S. investors are now able to speculate on Bitcoin price movements without actually holding any. Sure, early Bitcoin investors have made millions. Financial officials in Washington have begun to voice growing concerns about Bitcoin and other cryptocurrencies amid all this excitement. After that, China slammed the door shut by outlawing all cryptocurrencies last month. Does Bitcoin have a future as it continues to provoke both positive and negative reactions? The solution is intricate. Bitcoin won't likely replace the dollar or other important currencies created by central banks, but its technology will alter the way we conduct banking, payments, and other financial activities. Despite the fact that there are considerable drawbacks, these adjustments will have numerous positive effects. In order to achieve this equilibrium, governments will need to play a significant role. The fundamental draw of Bitcoin was that it allowed people to trade money using just their digital identities, and to carry out those transactions without utilizing fiat money produced by a national central bank or via a reputable middleman like a commercial bank or a credit card company. This achievement is made possible by blockchain technology, which is really cutting edge. Public digital ledgers are used to store all transaction data and balances for Bitcoin digital accounts that are kept on several computers throughout the world and are accessible to anybody with an internet connection. Surprisingly, the blockchain's security and impermeableness are due to its extraordinary openness. Despite all of its technological flash, however, Bitcoin has inherent flaws that prevent it from serving as a reliable means of exchange for financial transactions. Because of the network's inability to handle high transaction volumes, Bitcoin transactions are costly and time-consuming. Unstable value is a major issue for a potential medium of exchange. Bitcoin is unstable for day-to-day transactions because to its erratic price swings from month to month and sometimes even from day to day. Early on, Bitcoin had a shady image for promoting illegal trade. Hackers have lately exploited it to demand Bitcoin ransom payments. However, most criminals have switched to other cryptocurrencies that provide greater anonymity than Bitcoin. Nevertheless, governments are wary of any such cryptocurrencies out of concern that they may be used to support criminal activity including money laundering, drug trafficking, and financing for terrorism. Transactions cannot be undone, and errors cannot be corrected, because Bitcoin is managed decentralizedly. In the event that users lose or forget their passwords, any Bitcoin balances that are kept in digital wallets might be permanently lost. Additionally, the method used to validate transactions on the Bitcoin blockchain uses a tremendous amount of computational power and energy, which has catastrophic environmental effects. Strangely, Bitcoin has developed into a financial asset despite generally failing to achieve its primary goal of transaction facilitation. Due to its scarcity, many investors appear to think that it is a safe investment. The computer mechanism that governs Bitcoin restricts the total number of Bitcoins that may be issued to 21 million, in contrast to fiat currencies like the dollar that can be generated at whim by central banks. It appears questionable to value an object only on scarcity when that thing has no intrinsic utility. However, investors have continued to invest despite this, blowing a massive speculative bubble. Cryptocurrencies now have a staggering $2 trillion market value. Despite all of Bitcoin's shortcomings, blockchain technology as a whole is developing. Stablecoins, a class of new cryptocurrencies, have higher potential to function as exchange mediums. Due to the fact that they are supported by fiat currency reserves, their value is constant. The technique might become widely usable for low-cost digital payments after this upgrade. Because they don't have a bank account or credit card, many low-income households, including those in the US, cannot make digital payments. It is also possible to make international payments, which face additional challenges, more affordable, faster, and simpler to trace. Consumers, companies, as well as exporters and importers, will benefit greatly from these improvements. Proponents of blockchain-based finance see it as a method to democratize finance since it avoids traditional financial institutions, allowing for simpler and more widespread access to a variety of financial services and products. For instance, modifications to the original technology are making it simpler to circumvent banks and link savers and borrowers directly. It may be advantageous to have simple access to digital payments and fundamental banking services for credit and savings outside of poor nations. Yet even in a wealthy nation like the United States, where just 5% of adults participate in the official financial system. However, technology is not a panacea and sometimes makes issues worse. The upgrading of regulations to encompass cryptocurrencies and associated financial instruments, which frequently slip through the regulatory cracks, presents unique difficulties for financial authorities. Investor protection is a critical issue since inexperienced retail investors may wind up taking on more risk than they understand. When they are seduced by the new technology, promise of a rapid route to wealth. Facebook intends to launch its own stablecoin, prompting concerns about user data exploitation and privacy. And, maybe, the ability to create their own fiat alternative currencies in the future. The government must play a part in this situation as well by establishing guidelines for the use of consumer data and preventing the use of unregulated cryptocurrencies for criminal trade. Last but not least, there is the disconcerting possibility that, instead of new technology promoting a more equitable society, socioeconomic inequality may end up getting worse as a result of unequal access to digital technology and financial knowledge. Households without dependable digital connectivity may lose their rights as a result of the expansion of digital finance. Furthermore, the risks associated with crypto assets may ultimately rest mostly on uninformed investors who are drawn in at the conclusion of speculative frenzies. The technical revolution that Bitcoin has sparked has great potential for the future. Governments will still need to take a proactive role in controlling the technological, financial, and social risks even as they embrace the revolutionary potential of blockchain technology to benefit their population. If you find this video useful, don't forget to like and subscribe to our channel.